Hey there, it's Bill with Smart Trades. It's April 21st, about 11 a.m., and it's a Thursday. Right off the bat, let's get into the S&P here. And obviously, my short-term scenario looking for a rally to around 1322 or so, and then an acceleration and a third wave down to C was incorrect. That said, the longer-term count is still very much possibly intact. Um, Here's an alternate to what I've been showing. I have been calling this top here as a completed wave B, and from there I was calling this the beginning of wave C, this drop which I've now labeled B. Um, One of the problems with that obviously was that we had a rather impulsive looking rally up, and um, from there, in retrospect, a corrective decline. Um, that said, the longer term count, where I had targeted 1344 as the probable peak for a flat B wave, as still hasn't even been achieved. So we're still on track to possibly hit 1344 or top somewhere near 1344 and allow for this longer term count to still be in force. Now, the alternative to that is that the rally up from mid March is indeed an impulsive wave one. From there, we have an ABC down wave two. I have some problems with that. It just doesn't feel to me like we're getting ready to explode here in a third of a third to the upside. But, this market has surprised to the upside before, so we shall see. Also, a lot of folks blame the Fed or manipulation or whatever for the strong rally on Tuesday night and Wednesday morning. And indeed, it is unfortunate that it occurred overnight. But personally, I'd like to blame myself for not catching it. I think that the signs were there. This is a pattern I call a B wave breakout. And indeed, you had to trade it overnight, but and you obviously couldn't trade it on the S&P cash, but it was there for the taking if you had an open mind and were watching the market. At any rate, here's the Nasdaq. The Nasdaq is a little different. It hasn't quite gotten all the way up to that uh, the February peak. In fact, it's possible the Nasdaq is carving out a triangle wave 4, and that we're topping in B also of that triangle. We've got an extreme overbought situation in terms of the Nasdaq advances there. Oftentimes, that kind of extreme does lead to a higher, price high, and indeed we've already gotten that, and that is accompanied by somewhat bearish divergence on the Nasdaq breadth. So we do have the ingredients at least for a short-term peak. Also, just reviewing my longer term count, again, the idea here is that we are going to see new highs. The question is how we're going to get there. And so, again, here's the primary count that I've been emphasizing. Obviously, it's taking longer than I thought, if indeed it's correct. And here's the alternate count, very popular with a lot of folks, including certain famous Elliott wave folks. And my problem with this count is that there's no alternation between wave 2 and wave 4. Alternation is not a requirement, but in the Elliott wave principle, it is mentioned as something that you should look for rather than not. And to my way of thinking, I think that it's probable here. But we shall see. It's certainly possible that wave 4 has already bottomed, and again, we're off to a fifth wave already. But let's take it, as always, one step at a time. And for now, again, I favor that we've got a little bit of downside. Here's the Russell. You'll notice the Russell, which had been leading the way higher, actually is nowhere near its recent peak on this rally. Indeed, this looks very much like a possible A or 1 down, and perhaps a corrective wave 2 back up. And again, thus far, we're making a lower high. Here is a little more detail on the S&P cash hourly chart. Basically, this is the count that I had shown some time ago, and this includes 5 waves down of 1, A up, B down, and then a C wave back up. What still fits in there is that C has got 5 waves. We're still not taking out that recent high just below 1340. So this count is still viable even though it's been stretched. And I don't favor it anymore. It's still a possibility. As a practical matter, it doesn't really matter that much because in either scenario, my view is basically the same. That we've peaked up here, and that this is a wave 2 in C, and this is wave 1, as I just showed, or that B is continuing, and we may go up and actually test 1344 or so before rolling over into C. Again, here are those breadth divergences. I don't think this is we're getting ready to launch into a wave 3 to the upside. But obviously, if we see an expansion of breadth and a breakout of 1344, it could happen. And again, longer term, my targets are 1365 up to about 1380. So it wouldn't come as a total shock. It's just that the timing, to my way of thinking, is not right. Let's see. Here's the again. This is a close-up of that Tuesday night action. And the NASDAQ had come down in A. In retrospect, this triangle is B. That could also have been counted as a fourth wave. But I think I was remiss in not pointing this out. And in fact, this area I was looking for as resistance. But when it went through there early Tuesday evening out here on the West Coast, that was a red flag. And indeed, we consolidated above that previous a B wave peak, and again, this is what I call a B wave breakout, and it's basically a red flag that indeed, if you're looking for a top, that you're wrong. And I've mentioned this pattern before, and I've shown it a bunch of times on a bunch of different scales and markets. But I think it's a good methodology for at least giving you a heads up that you might be wrong when you're calling for a trend reversal, and that possibly the decline is corrective rather than impulsive. And indeed, obviously, to the extent that we've rallied above this high in the NASDAQ, I obviously was wrong. This is the euro currency. And you'll remember that I had talked about the possibility of a break of 143.50, looking for a retest or some consolidation there, and then a decline. Well, we got that on a fairly small scale. Indeed, the decline was about 200 points after the breakout of this little consolidation right at 143.50. However, and this was another red flag as far as the bearish case for stocks and bullish for the dollar, was that we came right back to 143.50, and as Paul Simon has said in one of his songs, one man's ceiling is another man's floor. Well, here we go. This is what was our ceiling here turns into a floor, and indeed at 143.50 we consolidated, or just above there I should say. The breakout was an excellent buy, and a 200 plus point rally on a very small risk. So in both cases, that 143.50 was key. Obviously, I was wrong in looking for a top in the euro, bottom in the dollar. But again, this pattern is something that replicates itself and is an excellent way to approach the market. It's basically a non-Elliott pattern. Excuse me. Gold. Gold, we were looking for a possible pivot around the 1478 area. It did not happen. Gold has been very strong. It's rallied right through this shorter term trend channel, and indeed it looks like we're heading towards the longer term channel up around 1525 or so. That channel is rising, so we'll have to cross that bridge when we get to it. But for now, gold is still pointing up. And finally, here's natural gas. Now, you'll remember I called for a possible little 1-2 low here. So far, that little wave 2 has held. Nonetheless, the rally looks, somewhat corrective in nature. However, and this chart is just a bit dated, we've actually rallied up a little higher here. This is actually UNG, natural gas fund, and in spite of the correctiveness of the pattern so far, natural gas is really hanging in there. And if you're long from this little 1-2 down here, my theory here would be to raise your stops to about 1069, and then up to on the other half up to about 1119. And just let this run. The long-term potential for natural gas, if indeed this is a bottom, is up quite a bit from here. So we'll let the market tell us if we're right or wrong. And even though the pattern is iffy on the short term, it keeps going up. And if you're long and the market keeps going up, you ride it for as long as you can. Anyway, we've got a 3-day weekend. Hope you enjoy it. Thank you very much for watching, and have a great weekend. Bye-bye.